This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily. I'm Carol Massar. Tim Stenivek, my host, is on assignment, off for a few days. But with us, lucky for us, is Alexis Christoforous. As we look at a market that seems like, Alexis, it's looking for direction. But nonetheless, we've got the S&P 500 kind of hovering near an all-time high.
I mean, the next catalyst for this market, when you think about it, it's got to be next week with the Fed.
Agreed.
But in many ways, I think it's a done deal. Quarter point cut. If we get anything other than that, that's going to be a wild ride.
Exactly. So we're going to talk about that. That is certainly a focal point over the next 60 minutes. We're going to talk about an economic surprise. Maybe it's a surprise. It's on the U.S. labor market. We're going to talk about a Hassett Fed, what that would mean. We're going to talk about the Metaverse in reverse, why the stock is rallying. We're seeing Metaverse was such a big play a couple of years ago.
Zuckerberg was all in. And now he's pulling back in a big way. Investors like it. Stock is up, though, today.
Yeah, totally. All right. And we're also going to get a double dose of medicine. The CEO of Compass Pathways, he'll be here back with us to talk about the path to FDA approval of the company's psychedelic treatment. And then the director of the Women's Heart Program at Weill Cornell Medicine on cardiac risks to women.
I'm looking forward to that conversation.
Heart disease, top killer for both men and women,
yes.
But there are some particulars when it comes to women. All right, let's get a check on that trade as we move ahead on this 2 p.m. hour here at Bloomberg. Here is Charlie Pellet. Welcome back.
Thank you very much. Thank you. And here's what's going on. We've got the Dow fluctuating right now, down by half a point. Little change right now. S&P 500 index higher by 3. Also little changed on the day, while the Nasdaq Composite Index up by about 18 points right now, up by about 0.1%. Our Mag 7 Index pushing higher by 0.1%, and cannot ignore the move in the Russell 2000 Index. That index up right now. Small cap shares advancing by just about 1%. 10-year 4.10% with a 2-year 3.52%. Spot gold currently higher by 0.1%, 42.08 the ounce. A retreat for silver down 2.7%. West Texas Intermediate crude oil up 1.5%, and Bitcoin now down 1.7%, 92,160 on Bitcoin. Goldman Sachs has paused a planned $1.3 billion mortgage bond sale for CyrusOne, the data center operator that supports CME Group, after a major outage that hit one of the world's largest derivatives exchanges. After earnings, Salesforce.com up now by 4.1%. After earnings, Snowflake plunging 11.2%. And Carol said it is the Metaverse in reverse. We've got shares of Meta platforms today advancing by 3.8%. Mark Zuckerberg expected to meaningfully cut resources for building the so-called Metaverse, an effort that he once framed as the future of the company. And you recall the reason for changing its name from Facebook, a topic we'll be covering right here on Bloomberg Businessweek Daily. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Remember, it's all we could talk about, and we focused on the sign, Charlie, and it was just like the sign change. It was just...
We all had to get used to that.
We all
That was like
did.
Facebook parent Meta. Okay.
Help me. All right, anybody. Let's talk a little bit about what we are thinking big time, and that is about next week's Fed meeting. We are less than 1 week, right, from the last Fed decision of the year. May be helpful to the Fed chair, Jay Powell and company. Today's data on the U.S. labor market. What we found out, Alexis, applications for U.S. unemployment benefits, they did fall last week, lowest in more than 3 years, and it may indicate that employers are still largely holding on to workers despite a wave of recent layoff announcements. We talked about that labor hoarding after the pandemic.
Yeah, I mean, but it doesn't seem to jive with a lot of the other data we've been getting, like from Challenger Gray and Christmas, like from ADP.
Yeah.
We've been working without a lot of government data. We know we're still trying to play catch up. So what is it? It's a very confusing picture, I think, especially for the Federal Reserve as they go into this last meeting.
Conflicting data. All right, so that's what we want to talk about. Joining us right now, back with us, in fact, is Bloomberg Economics USN Canada economist Stuart Paul. He's right here in studio. Hey, Stuart, so we've had you on back and forth a bit this week because there's a lot coming at us. And we're trying to figure out what is the plate that will be in front of the Fed when it gets ready to meet that 2-day meeting next week. The jobless claims data, is this good data? Is it clean data? Is it important data for the Fed?
It's definitely good data. It's not the most clean data. And I think that what the Fed is going to be thinking about with this jobless claims report is what it means in terms of the holiday shopping season. We always expected that, at least on a non-seasonally adjusted basis, unemployment insurance claims would fall during holiday season because folks are being staffed up to work at retail jobs or delivery jobs and so on. So on a non-seasonally adjusted basis, you would expect to see initial jobless claims fall by about 25,000 for the week during Thanksgiving. They actually fell by about double that pace. So that's why we saw the major tick down in the headline jobless claims figure just this morning. Now, it's not entirely in contrast with what we saw from ADP. Of course, ADP, which was released earlier this week, showed that during the early portion of November, which is when the survey window is, during the early portion of November, there was a decline in total headcount for private payrolls. So really, how do you reconcile the two? Well, the labor market is softening, but firms really staffed up for the holiday season. Whether those end up being permanent jobs is probably unlikely. And I think that that's what the Fed is going to be keeping in mind as it tries to reconcile some of these mixed messages.
So at the end of the day, this is really not a game changer for the Fed next week in their discussions.
I don't think so. You've heard it from other folks. I'm sure you'll hear it from me again. This is just a low hire, low fire environment. And I think that that's what the Fed is going to be keeping in mind. When that's the case, it's sort of a tenuous balance that's being managed in the labor market right now. You have a slow increase in labor supply. At the same time, you have a very slow increase in labor demand. And when that's the case, there's this risk of the unemployment rate rising further. That's what the Fed is going to be trying to guard against. And that's why we expect the Fed to deliver a rate cut just next week.
Yeah, it's fascinating because I do think about, what's going on at companies, how they are trying to kind of gauge, hold on to workers and let them go. They know what they saw during the pandemic, right? Is there still that fear? I'm just curious from channel checks and also something like the Beige Book, right? Anecdotal evidence, but that can be very important for the Federal Reserve.
Yeah, and the Beige Book, all things considered, was relatively soft. One thing that always stands out to me is what's going on in the Kansas City Fed District, of course.
You love this district.
I do. I bring it up, I feel like, every time I'm here with you.
He's a little obsessed, I might say.
And that's because we saw a dissent from Kansas City Fed President Jeffrey Schmid during the October meeting. He wanted to hold rates steady. We saw conditions deteriorating in Kansas City. We saw soft labor demand throughout the country in the Beige Book. For an FOMC that's looking around the country and seeing relatively soft labor demand in the aggregate, you could expect they're going to be guarding against that upside risk to the unemployment rate.
Right.
And the thing that matters most to me is when we look at the broad swath of economic data, we actually created an alternative labor market index that looks at a couple dozen different data sources. And just when we look at the broad swath of data, the labor market is about one standard deviation weaker than it is on average.
Right.
Again, that's what matters right now for the Fed.
I just want to roll into this because we've had several guests on air here who talk about we can't find workers. And this is Farm Girl Flowers. They've bought a farm. They can't find workers. We had another guest this week, head of a company. Again, can't find workers. The labor pool, how much has it been cut as a result of immigrants or lack of immigrants or
look,
immigration?
The lack of immigration has slowed the break-even pace of hiring. So the pace of hiring needed to keep the unemployment rate steady. It slowed that break-even pace of hiring from about 85,000 additional workers per month, to maybe about 35,000 additional workers per month. The pool of available workers is going to, of course, matter for different firms in different ways.
Right.
There are some folks who are going to be affected by a lack of availability of H-1B visas, those that are working in high-tech firms, or those that are running high-tech firms. There are those who are looking at more manual labor jobs and trying to fill those positions. They're going to be affected by immigration policy. But if we just look at the broad swath of labor market data, there are sufficient workers to fill jobs. That's why the unemployment rate rose in September.
Well, also, when you look at the unemployment rate among recent college grads, which is much higher, right, than the national unemployment rate. I know we don't have the freshest numbers right now. And a lot of those folks are graduating with 4-year degrees or more, and they're underemployed, right?
Yeah. So the theme that we can take from all of this is that there are big structural shifts that are taking place in the labor market. You're rolling out and implementing AI in large corporations, and that's affecting college grads. You're slowing the pace of immigration. That's affecting the labor supply at the lower end of the income distribution for lower skill, more manual labor work. And you also have this change in H-1B policy And that's going to affect those workers and firms that are relying on visas and, again, immigrant labor working at the upper end of services, of the services sector. So these are all big structural shifts.
Right.
And it just contributes to this tenuous balance. Any sort of slowdown in the pace of hiring or firing would lead to a rising unemployment rate that the Fed doesn't want.
All right, I want to bring into the conversation someone who just ran into the studio, our own Bloomberg Intelligence Chief U.S. Interest Rate Strategist, Ira Jersey. It's been a while. I'm so glad you're here with us. Talk to us about the data backdrop, how traders are reading it, and what it means for rates.
Well, I think first I want to go on what Stuart just mentioned, and you just asked about, Carol, about the job market. So my son just finished a seasonal job at Six Flags. He went into an interview yesterday at 8 a.m. At 9 a.m. he was working. And this is a manual labor kind of job,
cool.
And he's 18 years old, high school graduate, is kind of taking a gap year. So, I mean, there's jobs out there if you're willing to, do these manual jobs. But anyway.
Congratulations, Dad.
Exactly.
No, but this is good. You're right. It shows that there are the jobs out there.
Yeah, I mean, it's very anecdotal, right? But at the same time, I think it tells a little bit of the story. But, that being said, the market is certainly priced for a cut next week. But what's interesting is that we're then not priced for another cut for sure until next May, right? So it's like, is this one and done? Is this one and then options? I suspect that the Fed is going to continue to worry about the labor market. And as soon as we start to see more labor market data, if that labor market's not particularly good, then they'll continue to be easy, right? And maybe not cut every meeting, but at the same time be on the more cautious, easier side. And then the second thing is your discussion about the beige book was really interesting because
I love the beige book.
Yes, well, and a lot of people do, and the Fed does, right?
Yeah.
We know that the Fed overweights it. Powell certainly does.
This is a much more granular look at what's going on as opposed to some of the other data that we get.
Yeah, but it is survey based, right? It is like comments that are made by different people that members of the different Fed banks speak with regularly. But it's important to the Fed, and one of the things that we do is we parse it using a natural language processing model that we have, and what that showed is that it's in the last reading is that it was much more dovish than it was the previous two meetings. So it was overall pretty weak, and I think that because of that, that's one reason to think that the Fed is going to hike next week. And if you continue to see that weakness, I think that they'll cut even more in the first half, and that might be a little bit different than what other people are thinking.
I love that you said dovish because I want to get to someone who has kind of a more hawkish perspective. Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income, member of the Treasury Borrowing Advisory Committee. He spoke to our Bloomberg colleagues in Asia overnight about what he expects from the Fed. He also talked about the expectations of maybe a Kevin Hassett Fed. First up, though, he addressed next week's meeting. Listen up, everybody.
We will have a hawkish cut, coming up, but I'm not sure there's a lot of information coming out of that meeting, right? I think the markets are focused on what happens next, and what happens next is the new Fed chair, the new composition, and quite candidly, the meddling of the administration in Fed affairs. The market has reacted since the betting markets have, raised the probability last week. The bond market has performed quite poorly. So the bond market's telling you that there are some concerns there. But on one hand, you have the Fed independence question, with Hassett as, basically tied to the administration. But on the other, does he have the credibility within the committee to drive consensus? And so we don't know that answer. I don't think he has that credibility. I think that's what the bond market's telling you.
The narratives that are out there. Hey, Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income. I want to just ask as we wrap up here, and first to you, Ira, what's more important next week? Is it the Fed under Jay Powell, what he says and does next week, or our expectations around what a Fed could be with Kevin Hassett as Fed chair?
Well, I think next week it's the summary of economic projections, right? Because you're going to cut.
I forgot we get that.
Yeah, the summary of economic projections and the dot plot will probably be what moves my market. 2-year yields in particular, I think if you see any decline in the median dot, that you're going to wind up seeing 2-year yields probably rally even as much as 15 basis points in a hurry.
All right, good stuff. Stuart, your last thought on that. What do you think is more important?
Dot plot matters way more. I think
so neither of my choices. Oops.
Dot plot matters way more, and I'm actually really worried about the distribution of dots showing two emerging camps. You're going to have some folks, again, looking to guard against the labor market, but we also know that next year's slate of voters from the regional Federal Reserve banks are going to be quite a bit more hawkish than this year's regional Fed.
Is inflation still back there, guys, as a backdrop?
I agree. Right? It's still there. It's inflationary pressures that are out there.
That's right. mean, look, we still have inflationary pressures. Just tomorrow, we're going to get the much delayed September personal income and outlays report with PCE inflation. The annual pace of PCE inflation, core PCE inflation, is still going to be running 2.9%. Right. It's not the sort of thing that's going to keep, that's not the sort of thing that's going to alleviate concerns around inflation pressures. I think that the thing that probably matters more is that services inflation pressure is softening. And again, that just, focuses the Fed back on the labor market.
Or the Fed could change its target, but I doubt that'll happen.
Doubt it.
Guys, thank you so much, and I hope we can get the two of you back in here real soon. Bloomberg Economics U.S. and Canada economist Stuart Paul, along with Bloomberg Intelligence chief U.S. interest rate strategist Ira Jersey. All right, let's get to Meta. We are seeing shares rallying today. A top performer in the NASDAQ 100. It's all thanks to a Bloomberg scoop by our own Kurt Wagner. He joins us now from our Bloomberg News San Francisco bureau and studio. Kurt, great reporting. Tell us about Meta and kind of going in reverse when it comes to the metaverse.
Yeah, so this is something that has come out of conversations over the last several weeks. At the executive level at the company, they're doing 2026 budget planning. And Mark Zuckerberg has sort of asked executives across the board to generally look for 10% cuts. You know, how do we trim things down, head into next year a little slimmer? But for the Metaverse group specifically, he's asked for a lot more. And my understanding is that executives are still figuring out exactly how deep they're going to go, but that they're talking about cutting the budget by as much as 30% next year. And so for a company that has, touted the metaverse as the future of this business, right? I mean, they literally changed the name from Facebook Inc. to Meta Platforms Inc. a few years ago. It's a notable decision that they are pulling back. They're not getting rid of the metaverse stuff, but they are pulling back in a meaningful way.
I'm glad you said they're not getting rid of the metaverse stuff. What does that consist of? I'm thinking of like virtual reality type stuff, the cool wonky glasses. Are those things still going to be there?
Yeah, you're right. So there is a little bit of confusion because Reality Labs, which is this sort of futuristic unit within Meta, does a whole bunch of stuff. They do the AI glasses, the display glasses that they showed off in September. But then they also do sort of the Metaverse group, which I would bucket into two things. One is the VR headsets, the Quest sort of immersive headsets, and then Horizon Worlds, which is the virtual world software product that they develop. And so my understanding is this 30% budget cut is really in that metaverse specific bucket. So I imagine we'll see some deep cuts into VR and Quest. We'll see cuts into the Meta Horizon Worlds product, more so than the actual AI glasses, those Ray-Bans. That's something I think they think is performing well. And actually, I'm told that some of the savings from the metaverse stuff will be funneled over toward the AI glasses and other types of wearables in that department.
Totally makes sense. Just got about 30, 40 seconds here, Kurt. I think about when they went public, right? And they had to pivot quickly to mobile, right? Because they were kind of penalized for not being there in that space. Is this just a company saying, okay, maybe it isn't the metaverse. We're pivoting to what makes sense. We're listening to investors and analysts, and just got about 30 seconds.
I mean, think about what's changed in the last 4 years since that company name change, right? Back then, AI models, building multi-billion-dollar data centers wasn't the thing. The Ray-Ban Metas weren't a thing. So a lot has changed for them in that short amount of time. And quite frankly, they probably found that there are other better ways to be spending these billions of dollars right now. So again, not getting rid of it entirely, but better uses of the money.
Might Meta AI name change be around the corner?
I hope you cover that and not me if that's the case. So.
Great stuff. Congratulations. A scoop and exclusive by our own Kurt Wagner. He's Bloomberg News senior tech reporter covering social media. Hey, coming up next, the path to FDA approval for one psychedelic drug. This is Bloomberg Businessweek Daily. I'm Carol Massar, along with Alexis Christoforous, and this is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks now in the red with the Dow, the S&P, NASDAQ all declining. We're looking at a 171-point decline now on the Dow Jones Industrial Average, down 0.3%. The S&P now lower by 18 at 68.31, a drop there of just about 0.3% after earlier trading at near a record. We've got the NASDAQ Composite Index down 57, a decline of 0.2%. The Russell 2000 index of small cap shares, though, holding on to a gain, up now by about 0.6%. 10-year yield currently at 4.10%, with a 2-year 3.52%. Gold is down $1 the ounce, 42.01, drop there of under 0.1%. Silver down now by 3%. West Texas Intermediate crude oil up 1.2%, 59.66 a barrel. And Bitcoin now lower by 2.7%. Bitcoin 91,140 on Bitcoin. Paramount Skydance is accusing Warner Brothers Discovery of failing to conduct a fair auction, saying the film and TV company is not acting in its shareholders' best interests. Right now, Paramount Skydance shares, they're down 0.2%. Warner Brothers Discovery down 1.2%. The other player in all of this, Netflix, down now by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie. Alexis Christoforous here with Carol Massar. Thanks so much for joining us on Bloomberg Businessweek Daily. Remember when psychedelics were like all the rage?
Totally.
And
We've been talking about them for a while.
And then they weren't, because in 2022, we saw prices collapse, money was pulling out, trial results weren't where they needed to be. It's having a resurgence. According to Bloomberg intelligence analysts, they're estimating that the psychedelic drug market could grow to $7 billion by 2032.
That's a decent market.
Yeah. So the market potential here, they say, is clear, but companies could still run into issues with regulators, this we know, and in upscaling the products. So back with us here in studio, which we're so happy about, is Kabir Nath, Chief Executive Officer of Compass Pathways. And so great to have you back. You were here last in July, Kabir.
That's right, and it's great to be back. Thanks for the invitation.
So tell us, first off, just a little background for folks. This is your company, Compass Pathways, $515 million market cap, not too shabby. Stock is up 42% year to date. We know there's a lot of volatility in this industry too, but that's not too shabby either. Tell us what's changed since you were in our studios in July.
Thank you. So we're excited about the fact that we're now in a position to potentially accelerate getting this medicine to patients who so urgently need it. Let me remind you that there are 3 million patients living with persistent depression in the US. Fewer than 5% of them today are treated with a medicine that was actually specifically studied for or is approved for treatment-resistant depression. And this is depression that is chronic, it's refractory, often people are unable to work. It has dramatic direct healthcare costs in terms of costs of emergency room admissions, in psychiatric care. But it also has real social costs for these people. So what's changed is we've had a really excellent conversation with the FDA about their desire to see, subject to us continuing to produce really strong results in terms of efficacy and safety, their desire to see this moved more quickly. We've completed the enrollment in our second final stage study, which we did ahead of expectations, which is really down to the great...
So this is a phase 3?
This is a phase 3. This is the second of our final stage studies. We've completed the enrollment of that. We expect to have the primary data from that in first quarter of next year. That will give us the second of our final stage studies. And with that, we are actually excited to be able to submit that to the agency and look to an accelerated approval.
Exciting.
Wow, that sounds like a really big move. I'm curious, just remind us, and we were talking with our healthcare team, how you guys designed the trials or research program to avoid some of the pitfalls that we've seen with, I think about the ecstasy and the MDMA drug application, that was for PTSD. How did you guys avoid some of those pitfalls?
So first, we had the opportunity to learn from some of the lessons. We've been in an excellent dialogue with the FDA now for some 6 or 7 years since we first started this process. Yeah, as we know, developing new medicines takes a long time and a lot of commitment.
Yeah.
We've done this in a very robust and rigorous way. We are collecting full side effect data. We're collecting all the issues, not just potential side effects such as headache and fatigue, which are transient, but also things like liking and so on, to make sure that there is really no abuse potential for this. And we've been collecting that right from the get-go.
Is there any abuse potential for this?
There is no history in psilocybin of people actually seeking it out or of any abuse potential with psilocybin, which is an important point.
I'm putting my investor hat on for a moment, and I need to ask you about intellectual property and how you handle something like that, because psychedelic compounds don't sort of fit comfortably into that compound, if you will, because a lot of them are natural. They can't really be patented, if you will. So how do you deal with that? And to what extent is your medicine, hold patents or have intellectual property?
So our medicine, COMP360, is a fully synthetic formulation of psilocybin.
Okay.
We have polymorph patents that address that, and therefore we have robust protection till 2038 with the potential for extension around that, because again, we went for a fully synthetic modern medicine.
Have you talked directly with the Health and Human Secretary Robert F. Kennedy?
We are focused on an excellent relationship with the psychiatry division of the FDA.
Okay.
We've been working with the same folks for 7 years.
Because he has certainly made some commentary around this that has given, hopes and expectations that this would move along more rapidly.
We're happy that there are senior figures in the administration who believe, like us, in the potential for psychedelic therapy, but we're really focused on delivering the right efficacy and safety through our studies and working directly with the division that's going to approve us.
So trial 3, third phase next year, early next year, give us an idea of a timeline. I mean, when might we see something like this come to market?
We will get the primary data, as I said, in first quarter of next year.
Right.
We will need to submit some more data later in the year, but we are looking forward to being in a position to complete a submission to the FDA in the latter part of next year, and then we'll work with them as expeditiously as possible on a potential regulatory approval.
So 2026, 2027? I know this stuff all takes long, and I know we constantly am asking you, but I think because it's been so much out there for a while, a decade and then some, right? I think we're all trying to, certainly for an investing audience, understand when this actually hits the market.
We are preparing to be ready for a commercial launch from the end of 2026.
Ah, he said it. Well, thank you.
What does something like this What does something like this cost?
That's the question.
So it's premature to discuss the pricing for this at the moment. First, we actually still need to see some of the longer term results from our studies.
Right.
In particular, we need to see over the course of the first 6 months what the potential for a second dose is, and really therefore how many potential sessions that a patient may need to have in a given year.
That's a great question, because you're talking sessions. So this is not a drug that someone would continue to take, or a lifelong sort of drug, if you will.
Absolutely, and it's a really important point there. What we have shown in our study so far is that a single session can produce a dramatic response that lasts for 6 weeks.
Wow.
Today, either it's a daily oral, or there is a product, esketamine, which you will need to take maybe 30 to 50 times a year. What we are showing is truly transformative, therefore, for these patients with this infrequent sessions.
We're talking with Kabir Nath. He's Chief Executive Officer of Compass Pathways. Ticker is CMPS. He's here in our Bloomberg studio, Bloomberg headquarters. Kabir, one of the things I think about then is, if all goes as you anticipate, and you've talked about the market for who this is for specifically, then do you move on to other uses and other treatments, whether it's PTSD, whether it's drug addiction? I'm just curious how far you can go with this.
Yes, thank you, Carol. And we are designing, have in fact already designed and finalized the design of a study in PTSD. PTSD affects 13 million people in America. And while there's this view that it's prevalent among veterans and so on, it absolutely is. That's actually only around 15% of that population.
Only 15%? Wow.
15%. Actually, 60% of people suffering with PTSD are women. And so this is a very large population. The only 2 drugs, medicines approved for PTSD, were approved in the last century.
Gee.
So this
we
is
could use something new.
Something different.
And so we are very excited about that. We have designed a study, and that we will be kicking that off next year.
I want to go back to the question of price.
Sure.
What about insurance, and how does that play a part in all of this?
From the get-go, Compass was set up in order to ensure broad and equitable access for patients, and that means the ability to work with insurers, both commercial and government. With the data we've already shown, as I say, a single administration producing statistically significant reductions in depressive symptoms after 6 weeks, we've already started to demonstrate the value that this can bring to the healthcare system. Patients living with persistent depression frequently end up in the emergency room. They sometimes have inpatient psychiatric care. there are direct costs to healthcare systems, and we have already started to demonstrate the value.
You know, and forgive us, Kabir, we do keep going back to, I know you can't talk about price or your guys are figuring that out, but we kicked off saying, according to our Bloomberg intelligence team, that this market, psychedelic drug development, could grow to $7 billion in sales by 2032. How much of that do you think is, or how much of that market size do you think you could get? And I'm curious.
So we have the potential to be ahead of other companies in this market by 2 to 3 years. And we're excited about the opportunity to treat lots of patients. So for us, this is about the ability to make inroads into those 3 million patients that need a new treatment option. The only medicine that's actually approved and is being really promoted for this population today is treating maybe 70 to 100,000 patients out of that population of 3 million.
Right.
So what we're excited about is the ability to bring this new medicine to those patients.
Is it $1 billion drug? Would you anticipate?
We would hope that if we can successfully treat, if we can treat a large number of patients.
Well, especially if you get, and you expand out. Do you go alone?
For other uses,
yeah. Do you go alone?
That's our intention. We've always said clearly that we believe that we can do this on our own in the US market, and that's our intention.
All right, what about side effects? I mean, folks are listening to this. A lot of folks are hoping that this is all going to work and come to market sooner rather than later. What are some of the side effects, though?
So on the day of dosing, there's some headache, some nausea, and that passes by the second day at most, because this is a day in a treatment center. We have a fully independent group of scientists and clinicians that reviews all our safety data on a regular basis. They have access to data from all arms of our studies, and they have seen no unexpected or concerning side effects that have caused them to alter the course of the study in any way.
And just remind everybody, and we just got about 40 seconds, Kabir, right? When it is given to a patient, there are folks around to really watch the process, make sure things go.
You're not taking this in your bathroom by yourself.
No, this is very much delivered in a safe environment, in a medical environment, with somebody in the room who is medically trained, who's there just to assure patient safety and comfort.
Do you see the finish line?
I absolutely do, and we're excited about that potential.
I just think how long we've been reporting on it and talking about it. It's really fun to kind of be on this journey with you.
I'm just wondering quickly, regulatory hurdles in 2026, do you think that it is going to be a more friendly regulatory environment?
With the psychiatry division, we have an excellent relationship, and that's been consistent over 6-7 years, and we expect that to continue.
Yeah, it sounds like you've been talking to them for a long, long time. Kabir, thank you. Nice to have you in studio. Kabir Nath, he's Chief Executive Officer of Compass Pathways, joining us right here. All right, folks, when we come back, we're going to stay on medical care and treatments. We've got the director of the Women's Heart Program at Weill Cornell Medicine stopping by. We're going to talk men, we're going to talk about women, we're going to talk about some of the difference that's coming up. Right now, we've got a markets that has kicked down to its lows of the session. Interesting change in the chart. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and right now we are looking at a market that is trading decidedly mixed. The Dow, the S&P, they are both lower. Nasdaq Composite Index, though, holding on to a gain of 15 points, up by about 0.1%. And the Russell 2000 Index of small cap shares also higher, right now up by about 0.9%. The Dow down 54 on the Dow Industrials, down 0.1%. S&P 500 Index. Little change now. Choppy session, by the way. We've got the S&P down under 0.1% lower right now by 2 points at 68.46. The 10-year 4.10%. Spot gold up $6 the ounce, 42.09, up 0.1%. West Texas Intermediate crude oil up 1.2%, 59.66 a barrel. And Bitcoin now lower by 1.9%. Bitcoin at 91,940 on Bitcoin. Recapping stocks lower, little changed. S&P now down by 2 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Bouncing around a little bit. Interesting trade here, so keeping an eye on it with about an hour and a half to go. Hey, we're going to switch gears, actually stay a little bit on kind of medical treatments, medicine in general, and a little bit of a backdrop here. The CDC, the Centers for Disease Control and Prevention, reminding us that the leading cause of death for women Alexis, in the United States, heart disease.
Yeah, it continues to be consistently. So over 60 million women, that is 44%, in case you want to know, in the U.S. living with some form of heart disease. And it might surprise you that it can affect women at any age. It doesn't, not like an over 60, over 70 situation. We should note heart disease is also the leading cause of death of men in the U.S.
All right. So it is a focus for everyone who is in medicine. And it brings us to our Bloomberg Businessweek Women's Health segment. We focus on key issues and developing technologies impacting the present and future of women's health around the world. And we touch on kind of everybody in terms of health often. Joining us right now is Dr. Nupoor Narula. She is director of the Women's Heart Program at Weill Cornell Medicine. And she joins us here in studio. Welcome, welcome. Nice to have you here.
It's wonderful to be here. Thank you.
I want to ask you, first of all, as Alexis and I just pointed out, that when it comes to heart disease, whether it's men or women, it's such a big problem here in the U.S., the #1 killer and cause of death for both men and women. What is it? Our diet, lack of exercise, all of the above? What?
Absolutely. And you have to think about other things as well. You know, you pointed out really nicely that young individuals can also be affected. And I think it goes to show that we really need to know a lot of things about our health. We really need to know our numbers. We need to know what our blood pressure is early. We need to know what our cholesterol is. We need to know what our blood sugar is. And certainly young people may have other genetic conditions, and it's important to know what those genetic conditions are.
So you're focusing on something called an aorta aneurysm. I've heard of brain aneurysms. What is an aorta aneurysm?
It's a great question. You know, the aorta very recently, just in 2024, was identified as its own organ, and very rightly and deservedly so. So it's the largest artery of our body. It attaches to the heart. It's actually shaped like a candy cane, and it takes blood, it pumps blood that's pumped from the heart, and it actually transfers it all the way to all the organs of our body: the head, the neck, the heart itself, the liver, the intestines, the spleen, the kidney, the leg. So it's critical for our sustenance, so much so that there are physicians such as myself, cardiologists, surgeons, that really dedicate their lives in caring for individuals who have problems with the aorta. And one of those problems is an aneurysm. And an aneurysm is essentially a dilation or bulging of that aortic wall. And so it's a little bit distinct from a brain aneurysm in terms of its location, but there are individuals with aortic aneurysms that can have brain aneurysms and vice versa.
So you've got actually an NIH-funded study that you are doing. Tell us a little bit about that.
Yeah, absolutely.
And nice to hear that you're getting money and continue to get money
funding,
from
yes,
the NIH.
Thank you. We actually recently got it, so I'm very, very grateful for such a milestone. You know, when individuals have aneurysms, once they really increase in size, dangerous complications can occur. And what do I mean by that? You know, you think of a balloon. As it gets bigger and bigger, a balloon can burst. The aorta, as it gets bigger and bigger, you can have a tear in the aorta. So now we have life-saving procedures, aortic surgery, that can be pursued to prevent these complications that occur. I think it goes with the theme. We want to be proactive rather than reactive. And so what our grant looks at is it combines imaging, advanced imaging, and genetics to really figure out how individuals with aortic conditions do through time, especially those who've had that aortic surgery.
So, I mean, I'm just hearing about this for the first time, aorta aneurysm.
Me too.
Are there symptoms? Is it the kind of situation where you don't know it until it happens? Because I know some of the brain aneurysms can happen in a snap.
Yeah, absolutely. Yes, it is. I mean, you can have large aortic aneurysms and you may not know that you have one until something catastrophic occurs. I think there is a positive outlook on aspects of this. Now provider awareness is going up. Now we're doing imaging for unrelated reasons. People are getting scans for prevention-based readings. Now we're taking very intricate family histories. Yeah, you were going to say something.
Well, we're talking with Dr. Nupoor Narula. Yes. She is director of the Women's Heart Program at Weill Cornell Medicine. It was so funny. I'm trying to think who did a story, whether it was the Times, whether it was us. But it was just this idea. If you go to, is it Korea? You can get scanned head to toe every year.
What a brilliant idea. And I don't know if our insurance companies would like that very much.
And it's a lot less expensive, but it's such a great
preventative kind of way to go about it.
And of like any kind of early problems that are out there, why aren't we doing it? Is it just because it's so expensive here in the U.S.?
It's expensive. And so I think that there's
why is it so expensive? Because if we were all getting it, the frequency, I don't know.
It's a really good question. I think the more we scan, the more we find. You can find things that may not matter, but we'll go down roads of testing. Right. So I think that it goes to highlight a couple things. Family histories, taking them from our family is free. right? Ask your family, have they had any sort of issues with the aorta? Has the aortic size been measured? Have they had any sort of prevention test? Did the aortic size come up in that test? Did anybody die suddenly in the family? If they did, was an autopsy done? You know, you can ask several questions to figure out what the cause of the passing was. So these are ways to screen. And then I always say, participate in research studies if you have the ability to do so, because I think involvement in studies and women's involvement in studies is really, really
That's
critical.
a really good point. And you know, sometimes you go to the doctor. I've been asked, would you like to participate?
Yeah.
I think the first instinct is no, thank you.
Yeah.
But it really can help science overall in general for years to come.
Absolutely. And the more science we do, the more sex-specific
I did it in
differences.
college, but that's because I got paid.
And some
Smart,
studies
Carol.
will still pay, actually, you know,
They do.
depending on what you do. But I think the participating in this allows us to also come up with sex-specific differences that have, you know,
let's talk
impact on
about that.
behavior.
Well, let's go
And
another
health.
layer down, because
Yes.
you specifically are focusing too on pregnant women.
Yes.
Why?
So I think pregnancy is a very delicate time in our lives, right? There's several changes that happen. Your heart rate changes, it goes up. The blood pressure goes down initially, but in the later stages of pregnancy, your blood pressure rises, including after pregnancy. The cardiac output, the pump, the efficiency of our heart goes up because we're supplying blood to ourselves, but also the placenta. And then you have all the hormonal changes that occur, estrogen, progesterone, and these can actually change the microstructure of the wall. So if you think of women who already have underlying aneurysms, and then you add in all of these changes, these women are in a more vulnerable state. So I think understanding what they have, their condition, instituting appropriate surveillance, and thereby appropriate management allows us to take women through pregnancy safely.
Your advice to maybe a pregnant woman hearing this, or someone who has a pregnant person in their life and they want to be proactive, what's your advice to them?
Know your numbers. Really know your numbers. Know all of your numbers. We very rightly talk about blood pressure, cholesterol, blood sugar. You should also know, if you've had a scan, what is the aortic size? And also know your family history. Two big things to take away. We always need to be proactive rather than reactive in as many ways as we can.
Is it more likely for a pregnant woman to have an aortic aneurysm?
So it's not that the pregnancy will cause the aneurysm. It's that a woman may have an aneurysm, and during pregnancy, it is possible that that aneurysm may grow a little bit in size.
Okay.
I also, before we let you go, I was reading an article recently in the Times about the signs of a heart attack. And they're not always the outward, I'm holding my chest, shortness of breath. And there was one doctor who did some research in India who was saying, it could, if you look at blood pressure through the years, if your blood pressure seems to oscillate a lot, that could be a signal. Is that true?
I think anybody can have any sort of manifestation, right? So when you even think about blood pressure, in what environment are we measuring our blood pressure? Is it at home? Is it in the doctor's office? So certainly, there are changes in blood pressure, changes in heart rate, and then there are symptoms, but there can be atypical symptoms, not the classic symptoms that we see. And so I think if anything feels unusual, bring that to your provider. That's your time to really talk about it.
You know your body the best. Like if something's going wrong, I have a feeling we're just sending a ton of people to the doctors. And getting their measurements. Doctor, thank you so much. Really appreciate
pleasure.
it.
Thanks for having me.
Enjoyed it. Dr. Nupoor Narula, she's director of the Women's Heart Program at Weill Cornell Medicine right here in studio. All right, folks, when we come back, a check on the trade. We are seeing stocks bouncing around off our highs and lows. We also get a check on stocks on the move. This is Bloomberg Businessweek Daily, and this is Bloomberg.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, just coming up on the last hour of trading on this Thursday, December 4th. Carol Massar along with Alexis Christoforous in for Tim Stennebeck, and we've got a market. Little change. Yeah, we're probably waiting for that Fed meeting.
No, we just don't know which way to go. you know?
I think we're just waiting, right? I think it's for the commentary. I think it was fascinating what Ira said that, is it that 2026 we don't see any more rate moves until
he was saying maybe May. Yeah.
Which is pretty big. Hey, right now the S&P, call it flat, just down just shy of 2 points, and the NASDAQ 100 down about 54 points, a decline of 0.2%. All right, I'm Carol Massar along with Alexis Christoforous in for Tim on this Thursday. Let's take a look at some stocks in the move today. And with us is Bloomberg News equities reporter Alexandra Semenova. Alex, retailers, they've been front and center for the last couple of weeks reporting earnings. Dollar General out today.
And we're learning something about the macro picture with this stock, that consumers are hunting for bargains. So perhaps they're not doing as well well as we're hearing at the headline level. Dollar General raised its full year outlook, showing that value-focused retailers are doing very well as people are looking for cheaper items. Their stock is rallying about 12% right now. So good for the company, but a sign that perhaps people are struggling with still very high costs.
I think it's interesting when you're looking for value and good deals at Dollar General.
Exactly.
Like how much,
Dollar
right,
Tree yesterday came out with very good earnings and raised guidance. And aren't they seeing higher income earners?
They are, yeah.
Shopping
And
there.
another company that is kind of telling us something is Walmart. There was a really good point made today by Jim Paulson, veteran strategist. He said that when Walmart outperforms global luxury retailers, that's a sign that typically U.S. consumption is not doing very well, and typically it precedes slower GDP growth. So perhaps some of these low-income focused names are a sign that maybe the economy is in a little bit of trouble.
Read the tea leaves there.
Exactly.
Yeah.
All right, so Dollar General, DG down 12%. I'm just taking a look at Walmart. It's flat today, but yeah, it's interesting to see that in terms of the narrative. Where do you want to go?
I want to go media. I mean, this bidding war for Warner Brothers Discovery is getting confusing. It's getting ugly. Paramount Skydance now has something to say. They're accusing them, right, of not playing fair.
Yeah, Alexis, getting ugly is right. It's really contentious now. Paramount, one of the buyers vying for Warner Brothers, accused it of failing to conduct a fair auction. They sent a letter to CEO David Zaslav saying that the company is not acting in shareholders' best interests. Look at the stock today. It's down about 1%. In a response, Warner Brothers said it had shared the Paramount letter with its board. As we know, it has been officially put on sale in October after receiving an offer from Paramount. It also has interest from Netflix. It has interest from Comcast. So it's been really heated, and people are getting...
And some are saying that Netflix is now the front runner, a mostly cash bid. We don't know for how much.
Yeah,
but apparently it's more than what Paramount bid.
Yeah, but apparently Paramount clearly disappointed here. They feel like they're not getting a fair chance.
Well, you brought up, too, like on our morning call, like, do we know what the prices are, or we don't know completely?
There
with this
have been
second round?
some numbers out, but
I mean, 60 billion was like the last thing I saw publicly, so it's got to be, you would think, north of 60 billion.
Exactly. It's changing every day. And
also,
I want to point out that Paramount is the only one of them that is actually trying to take over the entire company. So it wants to buy... it's CNN, TNT, exactly.
Yeah, let's remind everybody, Warner Brothers Discovery right now is a $60 billion market cap company. So
they're looking for a little premium. Give them some premium.
I would think so.
Paramount also raised the breakup fee to $5 billion from $1 billion. So they're basically saying, look, we think we're going to get regulatory approval if you guys choose us.
Yeah, lots of big numbers here.
All right, Meta, certainly a company we've been talking about a lot today, and it's higher.
This one is interesting because, as we know, Facebook rebranded to be Meta Platforms, and here they are saying that they're going to cut resources for building out the so-called Metaverse.
This story.
That hasn't served them well. Mark Zuckerberg seems to want to scale back on this business endeavor. He once framed this as the future of the company. It was all about the Metaverse, and then we kind of stopped hearing about it in the last few years. Executives are apparently considering potential budget cuts of as high as 30% for this part of the business, and they could see layoffs as soon as January. Apparently, these discussions were had in a closed meeting at Mark Zuckerberg's compound in Hawaii as they were deciding budget plans.
Gonna have a meeting. Why not do it there?
I mean, sign me up.
Investors
feels a little.
Yeah, investors clearly like the news, though. The stock is up 3.5% right now.
Gotta say, an incredible scoop and exclusive by our own Kurt Wagner.
Yeah,
it's incredible
really good
reporting.
Story.
But it's something we talked about too, that, investors and analysts have kind of wanted this. So it's the company saying maybe
really
this
generating much for them. So
if anything, they thought it was a drag on resources. Yeah. But I guess in a coup for Meta yesterday, they stole away an Apple design exec, right?
Yeah, that's also been interesting to see some of the hiring going on between these Mag 7 companies, just poaching talent from one another.
It's the Game of Thrones AI version.
Exactly.
We're going to talk about with Gene Munster.
Maybe that could be a new Netflix show. I'm sure they're working on it right now.
Exactly. We're going to talk about all of that with Gene Munster in our next hour. Alex, thank you so much. Always appreciate it. Bloomberg News equities reporter Alexandra Semenova. Be sure to check out all of her reporting. You can find it on the Bloomberg and at Bloomberg.com. For more conversations, our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. All right, Alexis, we are heading into the last hour of trading, bouncing around, little direction. Yeah. Call it just slightly lower on the S&P, NASDAQ 100, just down about 0.25%, but You know.
By the way, Dollar General, best performer there.
I know.
In the S&P today.
It's not a Mag 7, everybody.
No, no, it's not. Intel's the worst performer, by the way, in case you're wondering.
All right, coming up on TV, the close headed your way, and Alexis and I continuing right here on radio.